G'day everyone, this is Jackson Milan, the Wealth Mentor.
Sam Panetta, CEO and co-founder of Aureus Financial.
And we're here for our weekly live Q&A for Ask Aureus Anything. I've saved up some money and I want to invest it. Should I invest in the stock market? Okay, this is a good one. Links kind of back to my last question. I'm not a big believer in stock picking. And it's something that I've never done and I never will do, mainly due to the fact that I've always believed that I shouldn't have an ego to believe that I can pick stocks better than somebody who's doing it professionally every single day. And as such, given that I'm time poor, I'm trying to run a business, I'm just trying to live a life in my free time, the last thing that I want to do when I go home or on my lunch break or whenever I can find a moment is to try and manage my own personal portfolio. So I'm a big believer in index-based or passive investing. And I spoke about it in my book as well, of my own personal investment strategy, which has been built obviously off my business, off property and off index-based investing. And I implement an approach called a core satellite approach, where at the core of my portfolio is essentially my business and my property investments. And then I create satellites around my core portfolio utilizing index funds that add certain characteristics to my portfolio. So what I chose was a provider called Vanguard, who is a passive fund manager, the largest index fund manager in the world. They have what's called pre-mixed portfolios that they manage, and extremely cheap. They charge like 0.29% per annum for any money that you've got invested. And essentially they give you diversification across the entire world with thousands of underlying investments across Australian shares, international shares, listed property, bonds, fixed income, cash, even emerging markets, all of that in one fund. And when they've actually compared the historical performance, it's outperformed. I think it's been in the top 4 or 5 funds across all funds in the world. And it's a passively managed investment. So they've actually outperformed active managers who are constantly trying to outperform the market. The biggest thing here is about sticking the course. My mantra across everything that I've preached a lot of times is simple, sustainable, and scalable. If I've got an index investment, I can set up a direct debit every single week or every single fortnight or every single month to put money into the market. And I know that it's getting taken care of. Since inception, it's been getting 9% a year. And I know that it's going to continue to do that moving forwards, even though there's going to be volatility because it is an index-based portfolio. The market's history speaks for itself. So I would say instead of stock picking, similar to what we spoke about with Daniel Pastro when we did our kind of day trading podcast a couple of weeks back, unless you're going to be dedicated to mastering this and making a lot of your own mistakes along the way, leave it to the pros. Find a good diversified investment like an index fund and contribute money that way. That would be my advice.
Yeah, a lot of people that are trading stocks and all that's their job or that's their business. That's not their investment strategy. That's how they earn a living.
Yeah.
You really need to take 2 different mindsets between what's a long-term investment and what's a speculative business that you're
Yeah, and look, 99% of them underperform. I'd probably say 90% of them underperform the market, those active traders, because you've got to think that they're incurring costs every single time they're chopping in and out of the market, and those costs add up. So there was a 10-year bet that Warren Buffett had with a hedge fund manager, which finished the tail end of last year. The hedge fund manager actually called off the bet. And 10 years ago, he bet Warren Buffett that he could build a portfolio and actively manage it and outperform the index. And Warren Buffett basically said, look, I'm going to just buy the S&P 500 and essentially continue to accumulate over 10 years. And if you can outperform the S&P 500 over a 10-year period, I'll give you, I think it was $1 million was the way the bet that they had. He was supposed to be going for another year or so, but he was so far behind, he called the bet. And so the index outperformed. His excuse was, it was the best 10-year growth in the history of the S&P 500. But it just goes to show that active fund managers very rarely outperform. Even somebody who's willing to put $1 million of their own money in the line still fell short.
Yeah, and I think for beginning investors, right, for people that are first getting into it, it's the old tennis theory, right? So pros win points and amateurs lose points, if that makes sense. So when you're starting out in investing, your main goal shouldn't be to shoot the lights out. It should be to minimize the amount of errors that you make.
Mm-hmm.
Do you know what I mean? And that's a lot of what we do with our own clients.
Correct.
It's not about doing the sexiest stuff. It's about saying, all right, let's minimize the amount of losses that you're going to take along the way, and you're going to do better than most people.
Yeah, it's one of those things. Yeah, minimize losses. Losses is what kills your portfolio. So yeah, good observation.